The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, if you watch the hit comedy drama series The White Lotus, which is set in luxury resorts around the world, it might have inspired you to book a stay in a 5-star hotel. But for wealthy investors, it looks like they're taking a step further. Some are buying entire establishments. That's right, wealthy investors are turning to hotel investments as dynamic assets. But what are the benefits of investing in hotels, and what are wealthy investors looking for when investing in hotels? Well, to find out more, joining me now is Steve Carroll, who is the head of hotels of capital markets of Asia Pacific at CBRE. Steve, welcome to the show.
Thanks, Hongbin. Thanks so much for having me. It's a pleasure to be here.
Thanks so much for joining us. Well, Steve, hotels have, long been an attractive option for sophisticated investors, but it looks like the asset class is even more popular with the wealthy and their family offices at the moment. What's driving this interest in hotel investments amongst the wealthy?
Yeah, look, there's a huge amount of interest in hotels, and recently we conducted a survey of our investors, which is quite a deep investor base, as you can imagine, from CBRE. And over 72% said they would invest, and if they've already invested, they would invest more in hotels over the next cycle. I think as you look at it, tourism is recovering, and in some markets fully recovered from the COVID sort of downturn. You've got the growing middle class, you've got air capacity going up. So hotel operating performance is really, really strong and attractive. And when you compare it to other asset classes like office or retail, there's just so much more growth that you can get out of a hotel today across the short and medium term. So that's really attracting not just the private high net worth investors, but a broad range of investors in Asia Pacific.
I mean, in fact, wealthy investors are turning to hotels as dynamic assets. Steve, what makes them dynamic assets, though? What kind of returns or opportunities do hotel investments offer at the moment?
Look, hotels are an operating business of such, where people check in and check out on a daily rate. So on a daily rate, you can mark the rate. So, i.e., you can put the rates up or down every day to sort of stimulate demand. So that dynamic pricing model in hotels really allowed hotels and hotel owners to de-risk hotels, because they can push pricing up or push pricing down to attract the demand at the right time. Again, when you compare it to other asset classes like retail or office that have got sort of longer fixed leases, only at inflation, hotels provide much more growth today. And I guess as you look across Asia Pacific, that the supply and demand of hotels is in balance. There's a lot more demand than supply. And from our CBRE perspective house view, we think that will continue.
I see. Well, then how do hotel investments differ from, other property investments?
Yeah, I think there's a risk reward in hotels. And I think with the hotel operators being large international managers, the Hiltons, the IHGs, the Hyatts, the Marriotts and the Accors, they have large scale and have sophisticated the hotel investment asset class today. So I think the risk reward is driven by, as I said, the dynamic pricing compared to offices. So you're getting higher growth and you can manage your demand a lot better. But at the same time, you're getting a larger return because you're taking on an office, you're taking on a business and an operating business rather than a lease. So I guess on a risk-adjusted basis, I think hotels are really, really well managed and sophisticated today, and you're getting a higher return when you compare to other asset classes.
I see. Well, family offices are also buying them across the world, especially, though, in Asia Pacific. Why the Asia Pacific region? What makes hotels in this region more attractive, you think?
Well, Asia is still in some markets emerging and growing. It's got a higher GDP in most countries than North America or Europe. So the rapid economic growth and urbanisation, the growing middle class, you've got more air capacity and more growth in air capacity coming in Asia Pacific. So every growth metric in Asia Pacific, when you compare it to other parts of the world, is higher in Asia Pacific. So from an investor's perspective, they're looking to tap into that growth, then hotels in Asia Pacific is a great place to do that.
I see. So what are the most sought after hotel investments right now? I mean, what features or location are these investors looking for, and what are the key factors investors do consider when evaluating a hotel as a, potential investment?
Again, it comes down to, if I start with the last part of the question there, it really is a risk-adjusted return, and making sure the return is balanced compared to the risk you're taking on. When we look at sort of the markets that investors are looking at in our investor sentiment survey, markets such as Japan, Australia, Seoul, Bangkok, they're all the top 4 markets of people. So that's the urban tier 1 city environments. Investors are also very keen on looking at markets in resort markets, and some of those markets include sort of Thailand, Bali, Maldives, Vietnam, and they provide more return because you're taking on more risk. So I guess investors as well are looking at the brands and the type of hotels they're investing in. Are they investing in 5-star, or are they investing in mid-tier product? I think there's a hotel and a hotel solution and an investment solution to match all capital profiles. If we look at sort of one of the hot topics today in the upper upscale and mid-tier sector, is really attracting a lot of attention, where it doesn't need as much labour or workforce to run these hotels. You can still get real uplift in a refurbishment or a rebranding in that space. So everywhere, every investor is looking for something different, but the upper upscale and mid-tier sectors are attracting a lot of attention today.
I see. Well, can we dive in a little bit on what are the different types of hotel investments out there in the market, and how do each type kind of impact investment strategy?
Yeah, look, as I said, there's a hotel investment for everyone, but I guess hotels are classified in classes. Like, you start with a 5-star and you work your way down through 4-star, 3-star, and those stars are driven by amenity. So in a 5-star hotel, like say the Four Seasons, you've got far more amenities, better service, and the hotels charge more for that. So you've got a higher chance to charge the consumer for that service or the amenity than you do in a limited service hotel that's got less amenity. So what investors are looking for is sort of, again, a risk-adjusted return. In the 5-star hotel, you have a lot of revenue potential to drive the rate up and revenue up in the hotel. But at the same time, you have a lot of costs to deliver that. And so that probably presents somewhat more risk. And so you need somewhat of a higher return. In a mid-tier product, such as mid-tier and upper upscale, it's sort of a balance. You have less labour, and you had some amenities, but probably not all the amenities. So investors are really looking for balancing the risk-reward sort of equation here. But as I talk through each market, whether that's urban or resort, or whether that's in Tokyo or in Sydney, I guess the risk-reward is slightly nuanced country by country. But again, I reference back the mid-tier and upper upscales are seeing a lot of attention today.
I see. So how do investors, approach hotels as dynamic, flexible assets that can, adapt to changing market conditions rather than just static income-generating properties?
Well, I guess, again, the rates can change on a daily basis on a dynamic pricing model. But in the same time, you can change your hotel to uplift the hotel. You can change the restaurant to a different cuisine. You can refurbish the rooms. You can put in more suites. You can add more amenity. And that sort of can be changed based on consumer demand, and that can be changed very quickly. So I guess to keep up with the rapid consuming demand changes, hoteliers have to keep evolving to allow the consumer to stay at their hotel and to drive sort of their average rates higher. So when you're looking at sort of the changing market conditions, it's a must for hoteliers to do that to really get the right rewards.
I see. So how do high net worth individuals kind of view the impact of digital transformation as well in the hotel industry, such as automation, artificial intelligence, and guest personalization? Do these innovations kind of influence their investment decisions as well?
Yeah, absolutely. And I think one of the changes in the industry over the last 20 years is the sophistication of the hotel operators and the hotel brands. So the use of, say, brands to drive the consumer awareness of their hotels, the use of loyalty programs, the use of revenue management systems to attract the consumer and to get the consumer efficiently into the hotel. And so that's more distribution. But from a technology sense, the enhancement in technology at the asset level while the guests are there, whether that's from IT or whether that's efficiency saving labour or whether that's efficiency in electricity or utilities, I think from a high net worth or just in general an investor base, they're really leveraging the technology to meet consumer demands, but also to make sure the profits are enhanced with that technology.
I see. Well, other than technology here, a lot of people are focusing on sustainability nowadays, especially with consumers looking for, eco-friendly hotels. So are wealthy investors also increasingly focusing on sustainability and social impact when it comes to hotel investments? How do green building practices, energy efficiency, and eco-friendly services affect investment decisions for them?
Yeah, I think in the private sector, definitely still emerging. In the institutional sector, and particularly European capital, ESG and environmentally, socially, and governance is a huge part of their investment decisions at the asset level and how they operate the business. And whether it's green certifications, whether it's carbon and how they account for carbon, or whether it's the social of their employment strategies, or whether it's the governance around how they operate their business. These are really critical decisions as you're running a business, whether it's the brand companies or the owners are considering this, and it's a big part of their investment decisions. I think as from a CBRE perspective, as we look to sell and buy for our clients, ESG is a really strong indicator of how the hotel professionally run. Is it going to be de-risked moving forward? Are there a lot of sort of costs that within that hotel to convert to ESG practices moving forward? So ESG is at the forefront in hotels, but in the private capital space, in particular in Asia, it's still got some way to catch up to, say, our European colleagues.
I see. And before we let you go here, Steve, how do you see the hotel investment landscape evolving over the next few years?
Yeah, so I think from an Asia-Pacific sense, it's continued growth. As I said, whether it's the GDP or whether it's the travel patterns, Asia-Pacific will grow faster than any other region, whether that's Europe or North America. I guess the emergence of the Indian outbound travel market, I guess the recovery of the Chinese market globally will also benefit Asia, but benefit the globe and travel. I think the innovation in sustainability, and as you discussed, the greater emphasis on technology to create efficiencies at the asset level. And then I guess as we move forward, it's really making sure that hotels are changing to meet the consumer requirements. As we've seen over the last 20 years, there's been a lot of hotels and a lot of trends change. And I think there will be more brands. There will be more F&B sort of brands as well. So F&B, ESG, will become paramount in hotels. So expect more change, but what I really will hang my hat on is Asia Pacific is a great market for growth, and that really will benefit hotels in Asia Pacific over the next cycle.
I see. Well, thank you so much, Steve, for your time and your insights today.
Thank you so much, Hongbin. Thanks for your time.
Thank you. That was Steve Carroll, Head of Hotels of Capital Markets of Asia Pacific at CBRE. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.